Good morning, everyone. To my panelists, it's a very good Tuesday, the 25th of August. Ali Kansaju, the CEO and founder at Rich Frontiers Management. Good morning, Ali.
Morning, Basim. Good to see you as always.
Thank you. And as always, we thank you so much, Ayode Jebo of Afrinvest Securities, the CEO.
Good morning.
And the man in charge of banking analysis at Vetiva Capital Management, Joshua Debisi. Good morning. Thank you.
Good morning, Basim.
Great. We appreciate your time. Let's just go through the markets. South African GSE was the biggest mover yesterday. Again, a big 1.21% because of the sentiments from the global marketplace, the correlation between South Africa's GSE and the rest of the emerging markets and developed markets is everyone's guess. So cross the 56,000 level, and that's a solid one there. The Kenyan market also moved about north of 0.75%, a very good one. The Egyptian market, the top 30 index, that is 0.37%. The Ivorian market slumped 0.2%, and the Nigerian market just about 0.03 basis points. Look at the East African markets. In Tanzania, the EcoBank Tanzania has a new managing director, Charles Asiedu. He is the one stepping in to take this bank forward. Meantime, the Kenyan markets, analysts are a little bit worried, and I'm asking Ali if he's worried that about 6.52 billion shares on the Nairobi Securities Exchange are now locked into securities lending program. What's the worry here? Is there a cause for concern? In Congo, the authorities have granted the new export ban waivers for copper, cobalt, tin, and a few others, and said this is going to be an open-ended check, as it were, after the ban was imposed a couple of years ago. Uganda shillings had a very steady day on Monday to start the current week. Meantime, Total is put pen to paper on securities on how to secure, put his money where his mouth is and his mouth where his money is for the Mozambique LNG project, $20 billion project with the jihadists and other gangs trying to delay that project. Ali, tee off for us the Nairobi securities market. I'm particularly interested in why this concern over the securities lending program.
So that was a very interesting data point. It's the first time we've got visibility on shares pledged as collateral against loans at the Nairobi Securities Exchange. And it's the first time I've seen the release of this particular data point. It tends to be very scrappy data, difficult to consolidate. So what it's telling us is that a lot of shares have been pledged as security against bank loans here in Nairobi. And I think, you know, in the context of what has been a very poorly performing stock market, the various indices ranging between -20 and -30%. The concern is that this could create a further selling bias if the market cascades lower. And I think that's what caught everybody's attention. We saw a little bit of a recovery yesterday, but nevertheless, what this is informing us of is that there are a lot of securities have been pledged as collateral with the banks. Just to say, in Nairobi, we had the release of Standard Chartered half-year results just before we came to your show. And just to give you an idea, half-year EPS was 9 shillings and 17 cents versus 13 shillings and 46 cents last time round. Loan loss provision was up about 328%. And just to mention that Standard Chartered is frankly the premier defensive stock amongst those tier one banks. They play a strong defensive game, and that really is probably the best game to be playing right now. And I think most people think those results outperformed expectations and their peers. You touched on a number of other stories. One was the security pact between Total France and Mozambique. This is, of course, as we've mentioned before, the biggest single FDI ever in the history of sub-Saharan Africa. This is the LNG story in Mozambique, but it's also the furthest north province in Mozambique, bordering on Tanzania. We've had a raging insurgency. Only a few days ago, the insurgents managed to dislodge the army from a key port for a couple of days. And therefore, the security challenge remains the biggest challenge for unlocking this extraordinary and monster project. And it's interesting to see that Total and Mozambique are looking at that very aggressively. To date, the Mozambique army, the South Africans, the Russians have not been able to damp down this insurgency. So that remains a challenge. EcoBank Tanzania announcement. EcoBank, frankly, was the first African bank to go Pan-African. If you look back at the history of African banks spreading their wings, they were the ones who were first out of the blocks. They remain in position in most countries across the continent. And in East Africa, it's been challenging, but they've kind of recapitalized those businesses. And eventually, once we return to growth, I'm sure you're going to see them return to growth as well. Uganda shilling doing fine. This is all about soft commodities, about coffee, where they've really ramped up production and earned about $600 million this year. And there was this inflow of NGO money also recently. Of course, Uganda's probably biggest export is their military. As we know, across the continent, they perform a lot of peacekeeping exercises. And finally, your story about Congo, this export ban waiver, I think it's speaking to the liquidity crunch that we're seeing in DR Congo. We had that eye-popping, I think it was 1,000 or 1,100 basis point increase in the interest rate a few days ago. And I think this is part and parcel of that story. So try and improve liquidity around the Congolese situation.
Interesting, the East African story, but within the Nigeria space, the GDP story on one hand, and of course the central bank decision on the Form M over-invoicing, transfer pricing story. The central bank came up with that release yesterday. The stock market was 0.03%. Not a very big day, as it were, on the side of the all-share index. But again, on the side of volume, that was a little bit a very decent Monday. So look at the Nigeria story around this corridor. Again, just within the West Africa space, the EFDB is starting these annual meetings tomorrow, while the president, Akinwumi Adesina, will be seeking a re-election on Thursday, sent out a message welcoming everyone virtually to this meeting. Let's talk about the GDP and the central bank story. I will allow Joshua to speak to the central bank story. Ayodeji, give us your thoughts on the GDP numbers yesterday, just in summary, everything we've gathered within the last 24 hours.
Okay, thanks. The GDP report just affirms the expectation of most analysts or most Nigerians. It was really very obvious based on some of even the leading indicators that we saw. So, and it's expected if you look at with the lockdown, and if you look at it by sector, so with GDP coming in at 6.1 negative, if you look at the oil sector contracted by about 6.6%. That's on a year-on-year basis, which we could link to the reduction in production. And we feel that for the oil sector, Q3 would even maybe worse because of the OPEC quota to reduce their production to about 1.4 million barrels per day. But the main, the non-oil sector that accounts for about 90% of the GDP, we saw there are some drivers of that sector. We saw the telecom sector growing by about 18% on a year-on-year, which can largely be also attributed to the lockdown. Now the remote working, it's been more people are working remotely, and the use of data has increased significantly. Both data and voice has increased significantly, though there's a reduction, a mild increase in voice. Financial institution is also the one of the subsector that stood out, gaining about 28%, and that's we can link that to the continued policy of the CBN to ensure that banks continue to increase lending. If you check for on a year-on-year basis, lending to the private sector has also increased by, I think, over 10%. So that has also been pushing the performance within that space. And Agric came in soft, though came in at 1.6%. So, and looking at some of the laggards, the manufacturing sector declined by about 8.7%. We know because of during the shutdown, a lot of the companies had to stop production. And trade too, import, there was restriction in importation and also importation and exportation of goods and services. So for what overall, what we've seen is in line with expectation. But what the focus should now be is how long are we going to be within, how long are we going to continue this contraction? So we know we're also expecting that Q3 would also contract, maybe, but not as much as we've seen in Q2, because we've seen that also uptick in activities. However, moving back to that positive territory would be based on major policies, deliberate policies of the fiscal and monetary authorities. It's more on the fiscal authorities because the monetary authorities, they are also limited in terms of how much what they can do. So we believe that we need this private investment, both foreign and domestic private investment, is part of what we unlock. We unlock the potentials that we have, adding value to most of our raw materials, not just exporting raw materials and import finished goods. So I think by and large, it's in line with expectation, and you would see that that's why we didn't get much reaction in the market yesterday. The market still closed marginally up, despite that negative report.
Great. I think Deji, I'm sure Joshua will agree that with the kind of volume that we saw in the banking sector yesterday and the pricing on some of the banking names, I'm sure the market had priced in this GDP. The market must have looked into the early numbers and perhaps sniffed through what the big five banks will release anytime soon as we get towards the end of the month. But again, the central bank continued to tweak developments within that industry. Joshua.
Yes, Boston, thank you. So I think, like you said, definitely there is some anticipation that, the banks will release fairly positive results anytime soon. But based on, what we've seen from the CBN yesterday, the whole policy regarding Form M, I think it's very interesting. The main takeaway from it is that the central bank will no longer be paying third parties for importation of goods. So any and all importation will have to be carried out through verified sources. And before the payments are even agreed, the CBN will conduct a check on the pricing of the products that you are bringing in, so that they know that they're not overpaying. It's just a way to plug any gaps and leakages. Obviously, overall, it's a very good policy, but I think it's coming a little bit late. But like you have mentioned, it's better to sort of, you start looking for plugs and for leakages when we are broke, not when things are going well. But ultimately, I think the product price verification mechanism is in line with global best practices. So I think that's fine. It's going to cause a lot of havoc to some businesses, but I mean, any business that was based on third parties or inflating or overpricing goods was not meant to last. But I think overall there's a lot of positives to take from the policy. And the implementation will now be the most interesting part, to see whether or not it will create a sort of lag between, people trying to import goods and, the goods actually being paid for and being brought into the country. But we'll have to wait and see how it plays out.
Yes, I think we'll have to see how it plays out, because again, to shift from this over-invoicing transfer pricing process to the one that is straight and forward, like it's going to take some time. Got to bend it and knock it all around to be able to get a straight path. But again, I think it's something the country should be willing to do. This being a practice for decades and creaming off now the country's FX reserves. Look at the Southern African market. Just a very surprising 1.2% jump in the stock market on the GSE yesterday. Quite a very big number there in terms of what we saw at the end of the trading day. Meantime, part of the story from Southern Africa relates to the banking sector. Absa says it has taken all the pains, payments up nearly 300%. Old Mutual reported 6.7 billion rand loss in the first half. Mozambique, the titanium miner, Kemarif's half-year profit dips 5% because of shipping problems, according to the country. And then yesterday, the big story from Zambia relates to the sacking of the central bank governor, Kayala. Meantime, got a replacement, but the IMF late yesterday evening says there should be an independence of the central bank. Ali, let's start with this development in Zambia.
So it was a very interesting development. President Lungu summarily dismissed his central bank governor. Tito Mboweni, the South African finance minister, set off a very aggressive tweet saying it's just outrageous. The central bank is not the fiefdom of the president. This has got to stop. Action's got to be taken, or words to that effect. The Zambians got very upset. President Ramaphosa then kind of rapped his knuckles a little bit, and then the IMF intervened as well and said that this is very suboptimal, where the executive is interfering in the workings of the central bank. Zambia has around $1 billion of foreign reserves left. Zambia is probably the canary in the coal mine in the African space, in the sense that the debt has grown exponentially. They hired Lazard Brothers to look at a restructuring of the sovereign balance sheet. They have not been able to agree with the IMF on that rapid disbursement facility, which I think is the only African country which has been unable to reach agreement with the IMF. That money is practically free or very close to. And so what we have is an enormous stress situation in Zambia. And from my perspective, I just don't think the executive is dealing with the problem effectively. And it's rather scary, because what happens when you run out of cash, we're about to find out in the Zambian case. So it's suddenly popping over the radar big time. I'm firmly in Tito's camp. I think what he said was absolutely right. President Ramaphosa obviously has to play some fast politics, trying to assuage the Zambians at the same time as protect his rather dynamic and charismatic finance minister. But overall, once you look through the noise, the signal is there is a really, really big problem brewing here, and firing a central bank governor is not going to fix it, I'm afraid. And so I think investors need to keep their eye on the ball there. Johannesburg Stock Exchange, big strong day yesterday, of course, following in the wake, as you said, of international markets, which hit records. Absa, that was very interesting, because they really threw the kitchen sink at things. They raised their provisions by close to 300%. Earnings were down sharply, but the share price rallied 2% yesterday. So the signal I took away from that was actually counterintuitively, investors liked the idea that these guys were taking all the pain in one hit, getting it out of the way. And most of the commentary I saw was speaking about a more of a V-shaped rebound for ABSA specifically once things start to improve. Old Mutual, look, that's a proxy for the South African economy. You'd expect it to be mirroring what's happening in the underlying economy. Kenmare, that's interesting. That's mineral sands, one of the biggest mineral sands mines in Africa. Mineral sands is titanium typically. It's a lot to do with urbanization. I thought that performance wasn't bad in the context of the economic uncertainty we saw in the first half of the year globally.
Thank you, Ali. A quick one between the EFDB and Afrexim Bank. Afrexim Bank yesterday reported about some of the numbers for the first half of the year, reporting total revenue 4% or 4.4%, net income plus 10%, total assets are negative 34%. Somalia's central bank had a board meeting talking about reforms. The 7-member board of governors met to talk about human resource policy reforms and what have you. And then, of course, there's a problem with between Etisalat and Maroc Telecommunications regarding the 285 million euros fine that Maroc Telecom got from the regulators in Morocco. And the Etisalat, the biggest shareholder, the Emirati, says they're not happy with that development. But today is or tomorrow rather, is the big day for the EFDB, starting its 2-day annual general meetings. Let me have your take, Ayodeji Ebo, first on the Nigeria increasing its equity stake in shareholding in EFDB ahead of this meeting.
Yes, I think this is a positive one. We always like to, yes, though maybe on paper we may not be the giant of Africa based on indicators, but we all know based on population, based on resources, we are the giant of Africa. So it's good that we are also consolidating our stake within that space so that it also gives us more control. But beyond that, we need to also tap into some of the benefits that the institutes should produce, the support in terms of development of the economy. So that should also be the main focus. We are positive that the incumbent would also win the re-election, and which is also positive for our branding as a country. So I believe that this is positive, and what we need to do is to look at what are the gains, how can we also benefit, or how can this benefit Nigerians in terms of projects, which I know the president is also very big on that. The president of the AFDB is also very big on trying to see how they want to support SMEs. So part of his initiative is trying to see how they want to create like an equity bank. You know, what we have here is most banks are faulty with debt. So if you have an equity bank like Islamic banking in quotes, where you all go in and both of you are also, you are taking the risks, you are jointly taking the risk. I think it will also go a long way in also boosting our SMEs, which we know account for a major, more than 60% of activities in Nigeria.
Oh, great. Thank you, Ayodeji. Joshua, what's your take?
Well, I think definitely it's a positive to see the increase in equity stake for Nigeria. Like Ayodeji said, you know, we should be the largest shareholder because we are the largest population, if not the largest economy. I think going forward, it will be very important to see a lot more independence from Western influence. I think that's a very big thing, because obviously I think that Africa's development should be spearheaded by Africans with, our best interests, in mind. And I think that that's the direction which the current president has been taking the organization. And I just hope that that continues, more long term, even after if he was to win re-election, his second term is complete. But I think ultimately, the bank has done a lot of positive. They have injected a lot of capital into various countries developing around Africa, but there's always room for more to be done. And I think that definitely when the focus is on developing Africa to add value and to create long-term, lasting effects, then I think it will be a positive for everybody involved.
Yes, good to be positive. Thank you. Ali, sum it up for us, your views about this week's annual general meeting.
So I just wanted to reiterate what my colleagues were saying, is that I think you're absolutely right. If we want to control the destiny of our continent, we've got to put our money where our mouth is. And, I think this, therefore, by the Nigerian state is a significant and singular statement of intent. And I think it's the right and appropriate one. As we talk about sovereignty, a lot of our leaders talk about sovereignty, but there's no sovereignty unless you're controlling the decision-making mechanisms which are spanning the entire continent. So I'm looking forward to hearing what comes out of this annual meeting. It's been a turbulent period for the AFDB, a lot of criticism, but I think they acquitted themselves with finesse and good decorum. And I think also counterintuitively, it gave them an opportunity to articulate where the organization is and where it wants to go. And I think that's also an important process of communication. Quite often the AFDB is somewhere up in the sky, but it's good that they are communicating. Their responsibility is for more than 1 billion Africans. And I look forward to hearing from them what they're going to do about our continent, particularly at what is, I feel, a significant inflection point, which was a combination of things, but really accelerated by this COVID, not medical, more economic emergency.
Interesting views from all of you. We thank you very much. We'll speak more about the AFDB meetings with you folks later towards the end of the week when we've heard from the additional, we've seen the election come and gone and all of that, and we'll review that, all of that together with you. So thank you very much for raising the curtain. The meeting starts tomorrow, formally speaking, 10 a.m. West African time. So we'll bring that into the show as well moving forward. Thank you very much. Have a great Tuesday. Ali Kansachu of Rich Frontiers Management. Thank you. Aide Jebo at Afrinvest Securities, and from Vertiva Capital, Joshua Odebisi, the banking sector analyst. Thank you. Have a great day, everyone.